Welcome to the PEAT Quick Getting Started video. To get started quickly, double-click on the PEAT icon on your desktop or click on Start Programs, Real Options Valuation, Project Economic Analysis tool. Upon which you will be greeted with this splash screen. And this splash screen is very easy to get started with. In this example, we have two modules preloaded. The first is a discounted cash flow model, or DCF, and the second is an oil and gas project economics model. Now, in future iterations or future versions of the software, we will add in additional modules as appropriate. Things like schedule risk, cost analysis, we have knowledge value added, more detailed DCF cash flow models, and so forth. But in this example, you can click on oil and gas project economics, and you can either load an example. A loading example just pretty much loads up something that's already preset for you, and is probably the best way to get started, if you will. And that's what we're going to use in this quick getting started video, just to give you an overview of project economic analysis tool. You can also click on new to start a new project from scratch, or open an existing project, of course. So let's go ahead and click on load example, and what you will see is this example that we created previously for you. Now, in Project Economic Analysis tool, it's very easy to navigate. The first is, let's take a look at the menu items. We have File, and of course, new DCF, new Project Economics, Open, Save As, several examples. You can load an example, or you can password protect and encrypt this. We can use a 256-bit encryption, which is military strength. Just be very careful when you do this in terms of putting passwords in there, because if you forget your password, it is impossible to break the password and to open the file again in the future. So just be careful, be wary of that. Edit, copy, cut, and paste for your data, if you will. We have an options menu item that's grayed out. The only way you can get the options menu operational is if you're in the options tab themselves. So you can add an option, for instance. You can add as many options as you wish. You can select that option, delete that option. You can duplicate the option, you can rearrange the option, move things, up or down, whatever comes first if you wish, rename it, do whatever you need on the options. Again, if you're away from the options tab, the options menu item is of course, not available. Settings allow you to do a global update, global calculations and everything else. Report configuration, when you're done with the model, you can generate reports. Just click Run Report if everything is selected, and you will generate an Excel worksheet or a series of worksheets with all the data, with all the results, with the grids, with the charts and everything else in Excel, whereupon you can copy paste any way you want. Now, we also have a help location. So if you click on About, it will tell you what version this is. This is PEAT 2012, which is the latest version that we have right now. You can go to User Manual. Of course, please spend some time on the User Manual. It goes into a lot of details and examples that you can look at. The install license is also very important, clearly. The default license is 3 days, but if you need to have a longer license, what you do is you click on Help, Install License, email us your hardware fingerprint, which is unique to 1 in 4 or 5 billion computers in the world. So if you email us your hardware fingerprint, what we can do is we will provide you a unique name and identification key that you can plug in. And once you do that one time, you are permanently licensed in this case. All right. Now, the Project Economic Analysis tool has multiple levels. The first is, we call this level 1, if you will, up here. And then we have level 2 tabs, that's down here, and level 3 tabs. Typically, what you want to do is you go from level 1, you go all the way down, and you go across, if you will, from left to right. And after you exhaust all of level 3 tabs, then you move up one level, exhaust all those tabs, and move up one level, and so forth, if that makes sense. So let's get started to see what PEAT does for you, if you will. So I'll click on Project Economics, the first tab, Global Settings. Well, in Global Settings, what that does is you put the settings in one time, and it's applicable across all the options. That's what Global Settings is. Global Assumptions. When you're in Global Assumptions, let's go through the list. Enter in your global discount rate. For example, 13%. User-defined rate. You can enter in up to 5 different discount rates and a corporate discount rate, whatever you need. Just type that in. Corporate discount rates for upstream chemicals. This is just a placeholder if you wish. Your tax rate, you can enter in 0 if you wish, or 25%. Depreciation years. These are standard operating procedures, or standard inputs for an oil and gas type project or DCF analysis. Depreciation rates. You can show as many decimals as you wish. If your numbers or results are in millions of dollars, then of course we use 0 decimals. You really don't need that level of precision. Same thing for year results. So I use 2 decimals by default for year results, 1.25 years, for example. Default is 1,000 simulation trials. That's always the best thing to get started. And once you're done with this and you're ready to run a proper simulation, I would recommend changing up to 10,000 trials or even more. Seed value as usual. So if you apply a seed value, you get exactly the same answer if you have the same inputs, running the analysis again and again and again. So that's all you have in this case. Pretty easy to get started with. Weighted average cost capital and beta are very optional. In most companies, most situations, you are given a discount rate. You know what the discount rate is. Plug it into the global assumptions. You're done. However, in the situation where you do want to calculate a weighted average cost capital, this is where you would go to. You enter in all the parameters required for cost of debt, preferred stock, common stock, and you would get a weighted average cost capital, which is your discount rate in this example. And of course, I've clicked on load example, which loads all these examples in here for you, just to give you an illustration of, what type of numbers to type in. So whether, annual coupon rate is 9% or 9,000%, for example. So in this case, something reasonable, if you will. Same thing for beta. Beta is used to calculate your capital asset pricing model. It's a relative measure of risk relative to the market to calculate, again, your discount rate. So again, these two are optional. Chances are you won't be using them, but it's available if you need to. So now now that we've exhausted level 3, we go up one level and we look at custom calculations, if you will. In custom calculations, this is where you would, just like in Excel, enter in your own data. So here's my data. You can type in some words, enter in something like 1, 2, and 3, for example. And if you want to, you can type in an equation, and in this case I'll use equal sum, and of course I want to sum up, in this case B6 colon D6. That's all I have to do. It helps if you're typing in the correct results. So here it says equal sum B6 colon D6 is a summation of 1, 2, and 3 in this case. Or you can click on the FX button and it gives you a list of functionalities that's available that you can use. So just some basic functions. We'll keep adding additional functions as we get there in future iterations. But what you can do is calculate, provide your own custom worksheet, if you will. Now this custom worksheet is really powerful such that you can, for example, link this custom set of inputs into your different options. And options is where where the heart of the analysis is. So in this case, we have option 1, okay? And by default, you have 3 options as listed. Again, you can click on the option, you can add additional options, as many options as you wish, delete them, rearrange them, rename them. So if I don't like large capacity, 100, MMSCFD, for example, I can change this to rename option, click on this, and then just rename this to whatever I wish. Okay, you can rename anything you want. Now, in each of these options, these are standalone alternatives, standalone projects, standalone implementation options, flexibility options, whatever you want. So these are standalone. And within this option, we have, in this case, 5 different worksheets that you can enter in. Now, let's go to the input assumption. Again, we go from left to right. So step 1, input assumptions, give it a name. So type in a name. You can put a description in here if you wish. The option ERA, ERC, when it begins, when the capital actually ends, and when you have value coming in, the economic lifespan, 20 years or whatever. These are inputs. You can choose your different discount rates that we've entered previously. In this case, let's just use the corporate discount rate. That's all you need to do. In investments, revenues, and expenses, those are your 3 categories. By default, it just shows about 3 rows. You can add additional rows if you wish, or just reduce the rows. You really don't want to have too many empty rows. It's just, waste of space, if you will. So I tend to choose the right number of rows in this case, if I know what I want. And of course, down here, we have capital investments, revenues, and expenses. Now, give it a name, type in a name, put a depreciation rate if that's appropriate, and a escalation, if you will, and all the different values in here for those multiple years. And don't forget to scroll to the right, because here we do have cash flows going for multiple years. Okay, so feel free to enter in additional years. Same thing for revenues and expenses. You can again add additional rows if you wish. Now, what you can do is select this revenue autofill and expenses autofill. So what that does is, if I do an expense autofill selected, if I go to expenses, now if I change this single value to $1, what happens is I click away from $1 and it autofills everything to the right all the way to the end of my cash flow statement. So I really don't have to, keep typing in the same value if I have that on. If I do not have that on, I will manually have to, enter unique values every single time. Okay, in this case. But if I have this again turned on, I can select this, type a value in, click somewhere else, and it auto fills everything in for you. So that's really helpful for you sometimes. You can click on copy grid if you wish to copy the inputs. You can go to something like Microsoft Excel, for instance, and I can always, right click and paste everything into Microsoft Excel. So again, you can copy paste from one software to another. In this case, I just copy paste it from Excel. Same situation. If I have my own data, 10, 20, and 30 in Excel, I can right click, copy this, go back into PEAT, and find the location that I wish. Right click on here, or I can just select this and edit, paste the value in if I wish to. Put additional values in here if I needed to do a simple thing as a paste. So typically I would use a Control V and a Control C. That's so much easier to do. So again, I would select the data I want, Control C to copy, and I would select the area that I wish to copy this in. For instance, these 3 cells, and do a Control V to paste it in. But in this case, because those are placeholders, I'll take those out again for illustration purposes. So there you have it. That's all you need to do. So anything with an input cell that's white in color, you put in data as appropriate. Now we can go to escalation depreciation, and this is automatically calculated for you. So these are in color, and you see blue and green and so forth. And what that does for you is just simplify visualization. So I can look across this, row very easily because of the color coding. So I don't have to start worrying about, what row pertains to what category and so forth. You can again copy the grid. You can view full grid. You can see the whole entire grid at once if you wish. If you have a very large, desktop computer, you can actually see the whole full grid. You can copy the grid, paste it again into Microsoft Excel, for instance. It's just escalation depreciation of your cash flows. You can go to the cash flow model. Again, this is calculated for you automatically for multiple years. You can see little notes here what non-escalated cash flows actually mean, escalated net cash flow, what they actually mean, and so forth. Again, these are intermediate calculations. It's all done for you automatically. All you need to do is go to those tabs, and again, you can copy that grid if you wish. Click on economic results. This is your results. In this case, we've only entered 3 discount rates. Therefore, you only see 3 NPVs in this case. You have your NPVs, you have your IRR, which is your rate of return, your modified internal rate of return, profitability index, return on investment, payback in years, and discounted payback. So all these results are right here. Again, copy results very easily. You can go to Excel, and you can always just paste it in. And here are your results, your economic results. All right. So in case you need it inside Excel or in another example, like in PowerPoint, for instance, or if you want to make your own charts and so forth. Or you can look at the charts that we have created for you at the bottom here. The default chart is NPV profile, net present value. So on the y-axis is your NPV, on the x-axis is your discount rate, and you can actually see the values on here in this table or graphically as well. So where it actually crosses at 0 is your internal rate of return. So we have 30.59. 30.59 discount rate is an NPV of 0 in this case. So pretty easy to do. Now you can go to information and details if you wish and type in your own information. So project title, objective, descriptions. You can even select certain things, bold it, use some of these icons to change the look and feel of your text. You can click on the categories if you disagree with the category title that we have here and just change the title. So if you don't like reference number and you like something along the lines of, say, ref number, we can delete that and click OK. And the next time when you come back to information details, it will be updated once you restart the software in this case. So very easy to do. The economic results, just as an FYI, very carefully also note that this economic result set of results is for this specific option. So I am in option 1, and therefore economic results pertain to option 1's economic results. If I go to option 2, the economic results here will be different because that pertains to option 2, if you will. All right. So let's go back to option 1's economic results. You can click on NPV or look at the cash flow statements over time. Your taxable income, escalated cash flow, you see the escalation of 2% in this case. And you can copy the chart, paste it wherever you wish. You can click on any of these icons. You can create things like grids. You can put in different labels if you wish. You can change the color of the beginning color, ending color of your charts, the image, the patterns. You can modify, zoom things in, move things to the left or to the right, and so forth and so on. You can save your settings, print the chart, and using all these different icons. So definitely play with this a little bit. Now, if you continue with the same process and you keep adding different options by selecting any of the options and click on Add Option, Add Option, Add Option, change the name, or you can duplicate the option so you don't have to retype the same input assumptions again each time. You can just click on options and duplicate an option and just make a change wherever is required. That makes your life a little bit easier. So once we're exhausted level 3, what we do is we go up to level 2 and we click on portfolio analysis in this case. Now, portfolio by definition is more than one option, is a portfolio of options. So each of these are different options, alternatives, different assets, different plans, different implementations, but portfolio compares all of them at the same time. So here we have economic results for option 1 and option 2. Now, you can go with option 3, 4, 5, option 50, and it will just go all the way across in this case, and that's your table here. So you can look at your capital investments, your IRR, your MIRR, all those different metrics, if you will. And that's for analysis of alternatives. Or you can do an incremental analysis. Incremental analysis, if that is option 1 or option 2 is your base case. So you can see, if it's a base case, clearly it'll be 0, and your incremental is whatever additional there is. Or you use an AOA where you're comparing dollar for dollar in this case. Very easy to do. At the bottom, you have two additional charts. The first chart here looks at an investment portfolio view. So we have in this case, and again, you can click on all these different icons, show, hide. So you can say that the green is option 2 and blue is option 1. You can click on some of these different icons to see what they represent, or you can hover over the icons. It tells you this is show or hide data label. So you can see this is option 1, this is option 2 in this case. Turn it off if you wish. Now, what it does is, in this case, we see the x-axis as the total investment costs in millions of dollars, and you see this drop list right here. On the y-axis, so x-axis is the first. This is the y-axis, internal rate of return. And of course, here, bubble size, the size of the bubble will be the NPV. And clearly, the way I have it set up, you probably want to have a very big bubble that's high up, floating, but to the left, if you will. So a low capital investment, high IRR, and big NPV. So imagine, if you will, if you have multiple types of competing options that you can actually compare with in a single view. That's very powerful. And you can change this, of course, to anything you wish, to, say, return on investment. So ROI will be on the x-axis. So again, you can modify this to anything you wish. Just be careful. You cannot have two of the same variables both on the x and y-axis. Clearly, that really doesn't make sense. But if you have 3 unique variables that you choose from here from this list, and it will generate the chart for you very easily. Copy chart, you can generate additional charts, save the different chart types, or you can also look at on the right-hand side profitability index. Here's profitability index of option 1 and option 2. You can compare NPV for option 1 and option 2 with the profiles, or just look at NPV at 13%. So option 1 clearly has a much higher NPV than option 2, and you can look at the actual dollar amounts up here in the table. Very easy to do. Again, portfolio analysis, comparing across multiple options. When you're in individual options, the economic results pertain to only that option by itself, if that makes sense. So pretty easy to do for project economics. Really don't have to do much in terms of the software. All you need to do is enter in a few numbers, in this case, go to the option, okay, input assumptions, type in the numbers that you would normally in an Excel spreadsheet anyway, and all you have to do is just navigate, click on those tabs, and it's automatically done for you, with the exception of the occasional drop list here and there to change the look and feel of your charts and so forth. Very easy to do. Portfolio analysis is really not much clicking going on. All you need to do again is changing the view, what you want to look at in terms of a chart. Very simple to do. Now that we're done with this, we go to applied analysis, because we've exhausted level 2 and level 3s at this point. So we're going to applied analysis. The analytics in this case, let's start on that one. We see static tornado, level 2. And a tornado analysis, we see a tornado analysis right here. And watch the detailed, applied analytics videos to interpret how to, understand the different colors and the different tables and so forth and so on. This is a quick getting started video, so we're just going to go very high level, if you will. So again, review the user manuals, review the detailed videos that will get you a little bit more involved. But what it does pretty much is all you need to do is select the option and the output that you wish. We have two options, and we have all these different outputs. So NPVs, IRR, MIRR, and so forth. So choose the one that you need. Let's say I want to look at option 1's NPV at 13% corporate discount rate. And I want to know what drives NPV the most in this case. What has the highest impact, the highest bang for the buck, the highest impact, highest driver, if you will. So in this case is your global discount rate all the way down. And it shows you by definition, the top 10 variables or the top, plus or minus 10%, and click on compute and it will update, by the way, if you change any of the settings. So the default is plus or minus 10%, show the top 10 variables, and it shows you 3 decimal points. Okay, you can look at individual unique inputs, you can look at line items, you can look at variable groups. Individual unique inputs means, if you go back to the project economics, and if you remember, these are individual unique inputs. So this is for year 2012, 2013, 2014. So it will test every single unique input for you. Now, if you select line item, what it does is it takes the whole entire line item and takes a plus 10% for all of them, minus 10% or whatever percentage that you put in as a line item. Or you can group everything. For example, in this case, expenses. The total expenses is 10,000 for this year. 10,000, 10,000. We'll take the whole entire set of expenses as a single variable and we'll test it that way. So you can always test it by individual unique line items or variable. Typically, we use the individual unique inputs. You can see the base value was $274 million. You go back in here, we see the NPV was 274,402. So what it does is it takes all of your inputs one at a time, and it does a plus or minus 10%. So your input, the global exchange, the corporate discount rate, whatever that base case was, I believe we entered at 13%, plus 10% is 14.3, minus 10% is 11.7. So when you increase your discount rate to 14.3, what happens is your input goes up, the output in this case goes to 229. So a higher discount rate, a lower NPV. When you reduce your discount rate to 11.7%, which is a 10% reduction of 13% base case, your NPV goes up to 327. And you see in this case, green is up, red is down. So at a base of 13%, it goes up to 14.3 for the discount rate, or it goes down to 11.7% on the discount rate. If you reduce the discount rate from 13 to 11.7, so reduction is red, applies to this single row, what happens is on the x-axis is your NPV, whatever you chose here, by the way. We chose NPV, therefore the x-axis is NPV. The NPV goes up when discount rate goes down. When discount rate goes up in green, NPV goes down in this case. So whenever you have red on the right-hand side, is a negative relationship. Green on the right-hand side, when revenues escalation goes up, guess what? NPV goes up in this case. But in comparison, discount rate has a much higher impact in this case. So you can actually see that. You can compute this, update if you make any changes, copy the chart. You can copy this chart, go to something like Excel or PowerPoint, paste it in, and now you have a chart that you can use, okay, for your presentation in this case. Scenario analysis, very powerful. This is for setting up things like sweet spots and hot spots. So scenario analysis, there are 2 steps. You create the settings and you run it pretty much. So in your scenario setting, what you would do is choose the output you care about. In this case, let's just say, NPV of option 2 at 13%. I'll choose that as an output. And here are all your inputs. What drives that NPV? So up here we have line items. So individual line items, you can do a plus or minus some percentage, or single items like a discount rate and all these different depreciation rates, corporate discount rates, and so forth. So in this example, let's just choose something very simple. Let's say revenues, guess revenue, plus or minus 5%. You can always do a plus or minus 10%, if you will, and then you go plus 10%, and you do a step size of 0.5%. So it would go from negative 10% to negative 9.5, negative 9, negative 8.5, all the way to positive 10%. And you can do the same thing for a discount rate. Let's just do a discount rate, let's say 10% to 20%. Let's step this at 1% at a time. You can choose up to 2 inputs in this case. And once you're done with this, if you're happy with it, give it a name. So my example, type that in, and make sure you click Save As. And you can save as many of these as you wish. Okay, and of course you can also color code these sweet spots and hot spots. So let me show you what I mean by that. So once you're done with this, and by the way, you can create as many scenarios as you wish. Click on Scenario Outputs, and the drop list here will have your scenarios. Here's my example, okay, of my different discount rates, 10 to 20%, and plus or minus, 10% in this case. Now let me go back to an example that was already preset here. And again, you can add decimals as you wish if you want more level of precision. And here's your data set. What I did in this case was guess condensate revenue versus discount rate. If you go back to the set input assumptions, if you recall, in here, this is already created for you. So if I select this, I click on Edit, it will preload all the stuff that I have set up previously in this case. See the checkbox. So I tested this plus minus 5% from 5 to 35, step of 1%. And what I did was I chose a color, and I say if my NPV value is less than 0, make it red. If my NPV is between 0 and $100,000, make it yellow. If it's between 100,000 and 250, make it green, and so forth and so on. So you can create up to 5 different color coding. And once you're done with that, just click Save if you made a change. Go back to my scenario output, and here you go. Here's the color coding. So I can look at my table here. Again, you can do a full grid, copy the grid, paste it. And if you make any changes to here, you might want to click Update just to update the calculation. It tells you that the scenario table is for option 1 NPV at 13% discount rate. And your variable down is condensate revenue under the revenue category. So coming down here by rows. And going across is your global discount rate. So across here is global discount rate. And the data that's in here is your NPV. Okay. And again, you can create as many of these tables as you wish with different sweet spots, hot spots, and color coding. You can identify, what critical cutoff points, if you will, for your analysis. So that's your applied analytics. And these both are static analysis. So static, tornado, and scenario analysis. Now, if you want to do dynamic or stochastic analysis, what you do is you go to risk simulation, of course. Now, if you're in risk simulation level 1, you see there are 5 tabs in here for risk simulation. Now clearly none of these tabs are available yet because we haven't run the simulation. So you always go from left to right. Don't just skip a tab. If you skip a tab, there's really no results here because you haven't done the analysis. So what we can do is follow the steps. Step 1, Step 2, Step 3, Step 4. So Step 1, okay, choose an option that you want. So in this case, we have only 2 options. Again, you can add as many options as you wish, but in my example, we've got 2 options. So choose the one option. And here are all your inputs for that option. Okay. Now you can select, let's say I want to simulate corporate discount rate. All I need to do is come to this setting here, this distribution icon, click on that, and this set simulation assumption pops up. The default is triangular, most commonly used triangular, normal, uniform, or you can choose your own funky distribution, like a Weibull distribution or Bernoulli and double lock and so forth. But typically we use a triangular distribution. You give it a minimum, and let's say in this case, let's do 10%. Likely is 13%, so make sure you do 0.13 for 13%. And a maximum maybe we'll do 15%. And you give it a placeholder. Placeholder typically is the most likely value or the average of those 3 values, so depending on what you want to do. And you can click OK. And what it does is it creates a checkbox in this case. It tells you your simulation parameters are right here. You set that up. You can set as many assumptions as you wish in this case. Now remember, in scenario analysis, you can only set up 2 at a time. But in risk simulation, you can set up hundreds if you want, as many as you wish. Now, let's say you're done with that. What you can do is decide that's step 2. And when you're done with that, go to step 3 and you decide if you want to run all options at once. So, for example, you can set multiple options inputs at the same time. You can set another input in here if you wish. And as many options, as many assumptions as you wish. Or you can run just the selected option only. So if you just want to test option 1 simulation. Okay, it's up to you. As many trials as you wish to get started at 1,000. At some point, you would probably finalize it with 10,000. Seed value, you can put in correlations. And when you're done, you can run simulation. Or even better, give it a name and hit save as. And what it does, it will save your simulation model for you. And notice I have several of these already saved. So if I select this, I can edit it, click on edit, so select edit, and what it does is it pulls up what I've set previously. So in this case, I've set up the global rate, discount rate, I've set up revenue escalation, I have set up escalation for condensate revenues, and so forth. Okay, and in fact, I've set it up for option 2 as well. Again, global rate, I've set it up for escalation rates, and so forth. Okay, and it was for 1,000 trials, seed value 1, 2, 3. So if I'm happy with this, I can just click on run simulation, or just double click on this, same thing, and notice that it's running, simulating, in this case 1,000 trials, and it's simulating everything within about 5 seconds in my slow computer. So it took about 5 seconds to run 1,000 trials. Now that you're done with this, go to the next tab, and here's your simulation results. And notice now we have results because we've run the simulation. And because we have 2 options and we ran simulation for both options, here are your inputs. NPV, NPV, okay, IRR, okay, for option 2's NPV, and so forth. So choose one of these that you care about. And you can play with the charts if you wish. You have your percentiles, 0 to 100%. 100% is your maximum in this case, and minimum, your median in this case, and what your percentiles, P5, P10, P20. Here are your statistics, your mean, your coefficient of variability, your volatility, if you will, your risk, your relative risk measure, your median, your skewness, your kurtosis, and so forth. So very, very useful, set of results. You can show as many decimals as you wish. Copy the results, paste it into Excel. You can copy the chart if you wish. You can show grid lines on the chart if that helps you visualize the chart better. You can turn it off if you don't like it. The green bars are your PDF, probability density function. The blue line in this case is your S-curve, or your cumulative distribution function, CDF, which adds all the way up to 100%. So blue bar, blue variable on the right vertical axis. Green bars, green left vertical axis, frequency. And on the y-axis is whatever you choose, in this case NPV. Now let's take a look at the chart real quick. In this case, I can put in something like a percentile, and say if I do a 10th percentile, remember to click update. If you click update, it draws the 10th percentile in this case. Okay, or I can do another percentile, 50th percentile. Click update, and we'll show you the 50th percentile. I'll take those 2 things off if I don't want to, and add in, put in a certainty value. So in this case, 200,000. Click update, and we have a vertical bar in this case that shows you where $200,000 is. Maybe that's your cutoff point, maybe that's your important value that you care about. So we draw this value in here. So this is just drawing the vertical line, if you will. Now that you've drawn the vertical line, you can click on custom text properties. And what that custom text properties does for you is, I only have 1 vertical line, so select that. If you have 10 of them, you'll see all 10 of them. And you can see the header. You can give it a name if you wish. You can give it a text. So this is my line. It's my custom text, if you will. I can change the text properties to whatever color I wish. Okay, you can choose the color, make it red, make it a different size font, make it, different shadow effects and so forth. You can change the line property, and the line property could be something like in red. Make it predefined with dashes, and make this really dark. And we'll click OK, and you see my line right here with the dash. And you see this A icons. I can move this up, move this down to wherever I wish, just in case I want to put it in a nice location, if you will. Now that you're done with it, you can go crazy with this, if you will. You can zoom in, zoom out, you can move things, you can change all the properties, the background color. You don't like the type of bar chart I have, change it to a cone, change it to whatever view that you're interested in, if you will. You can also extract the simulation data. If you extract the data into Excel, you can create your own chart if you want to, if you don't like the charts that we have. Or you can change the colors on the charts as well. The other thing that you can do is use a 2-tail, left tail, right tail type paradigm. So if I do a 5th percent and I do a 95th percent, all I do is I type in the value, 5 and 95. So 5 is here and 95 is here. So in the body it would be 90 percentile. Anything to the left is 5%, anything to the right is 5%. And here's your confidence interval. So between 131,000 and 455,000 is your 90th percentile. Or I can do a left tail and say, what's my worst case 10% of the time? Well, the worst case 10% of the time here is $155,000 in this case. So I enter in values and I get a percentage, I get a value. Or I can enter in a value. What's the probability this will be $501,000 or 105,000. I'm sorry. Okay, and you can type in as many data points as you wish on here. So let's say 100,000 and 500, dollars. What's the probability you will have less than that? And the answer is 0.18%. Okay, pretty good odds that you're going to make more than $100,000 in net present value. So you can play around with the simulation results, and again, these apply to every single chart. Okay, every single option variable in this case. You can go to overlay results. Overlay, you can overlay multiple variables at the same time. So I can choose, for instance, here NPV of option 1 with NPV of option 2 and see how they overlay on top of each other. In this case, I can do a show grid line so you can actually see the cumulative probability. Here's a CDF. And in this case, I will probably go with option 1 because it's shifted to the right. In this case, it's higher mean. You can look at all these different things. You can do PDFs. Here's a probability density function. So option 1 in blue. Okay, because we only ran 1,000 trials, so it's going to be jagged like this. If you do about 10,000, it'll be slightly smoother charts and so forth. But for illustration, this is good enough. You can say that the expected value is more to the right, but it has a higher uncertainty, higher width, higher level of risk than the option 2 in this case. But I would probably still go with option 1 just because it's symmetrical and it's to the right. And you can make that determination on IRR. You can overlay as many options as you wish into a single chart. Okay, very easy to do. Analysis of alternatives. Here is based on the simulation. I can look at mean values of option 1 and option 2. If you have 10 options, everything will be listed on here. So mean of option 1 is here. Mean of option 2, NPV, is here. You can look at CV, which one has higher risk. Option 1 has slightly higher risk at 34%, 34.75%. Coefficient variability, also known as volatility or implied volatility, compared to about 31.99 or 32%. Okay, you can do the same thing for all of these. So median variance, these are the statistics that you're looking at. You can look at dynamic sensitivity, which is different than your applied analytics. Static tornado, which is static sensitivity, one at a time. Scenario analysis is 2 variables at the same time. Okay, you're creating a sweet spot analysis. But dynamic sensitivity just means you're running all of them simultaneously. So if you have 100 different assumptions, you would see 100 different bars in this case. All right, and you can just choose the output that you care about, and you can actually see rank correlation. Green is positive, red is negative correlation, and the contribution to variance. So by looking at NPV at 25% discount rate, guess what? The escalation percent in revenues accounts for 87% of the fluctuation, 87% of the fluctuation of my net present value. So I better pay closer attention to the escalation value that I'm putting in, if that's the variable I'm looking at. All right. Now that we've exhausted the risk simulation piece, we go to the option strategy. Option strategy, please watch the video because we do go into a lot more detail on how to create an option model. And there are 2 option tabs here. The first is the strategy. The second is the valuation. Valuation is getting the numbers. Strategy is framing the options, if you will. You gotta frame the options before you can value it, by the way. You gotta draw a picture, in other words. So here is an example of a picture. Now you can click on some of these icons, you can do some examples. Here is an asphalt example. If you can't see it, you can always zoom in, okay, move things around. You can look at an IGCC sizing example. You can look at a World Cultural. Here's a parking lot example that for a large structure. You can do a build or buy strategy. You can look at all of these different strategy or create your own new strategy from scratch. Okay, so again, look at the getting started video specifically for option strategies to learn how to do this. So we will forego that for a little bit more detail on that other video. And so spend some time on that, if you will. So again, option strategy is for drawing pictures and pictures only. Okay, in this example, you can put in some numbers as illustration, but you're saying, here's my real options. I've got 3 different strategies to execute this. I execute the base case. I do a base case. I have the option to expand or expand now versus expand later. Okay, I have the option to switch, option to modify, option to import asphalt, option to do a flexible infrastructure, flexible facility. These are strategic flexibility type options, if you will. And again, this is for illustration purposes only, is for drawing and setting up your options. Okay. Now, when you're done with that, what you do is you go to the options valuation and you plug in some options. So step one is select the different types of option type, execution: American, Bermudan, European. American, you can exercise anytime you want. European, only at maturity. Bermudan is, sometimes. So all the time, sometime, and one time, if you will. So depending on when you can actually execute your option. Okay, in this example, typically you use an American. Step two is you choose the option that you wish. And by the way, this does not replace the Real Options SLS software, by the way. The Real Options SLS software is a lot more comprehensive, more powerful, it's customizable and so forth. But this is a quick, seat of your pants, behind the envelope type analysis for Real Options. It's still very powerful. And it creates abandonment option to contract, expand, combinations of these, option to switch, wait and defer, do you execute now and execute later, option to, with barriers. You can do multiple phases, a phase 2, 3-phase, 5-phase, complex 2-phase option. So in this example, you choose whatever you want in terms of what option you want to model. And here out comes a strategy view that gives you an example of what that actually looks like. So you do a phase 1 market research, you do a small scale R&D, small scale, low rate initial production, you do a test, well before you do a full, drilling implementation, you do, and so forth, before you do a full development and so forth. It gives you some pictures here, option to abandon, whether you continue development or abandonment. So you choose whatever you want, look at pictures. If that makes sense, then step 3 is where you type in your inputs as required. Now, you can choose the input that you want to use in your manual input, whether you want to automatically populate it with option 1's asset value, option 2's asset value, it will automatically populate it for you, or you can type in your own value if you wish. Okay. Now, it's pretty easy to do, or you can click on load example, which is always nice to do. So load example, just know that that's just a generic example that is not your numbers, but it illustrates, how to calculate this. So you can look at some of the sample numbers here, and you click on in step 4, compute, and here's your result, $125 million in this case in your option. Now, if you're happy with this, give it a name, okay, and click Save As, and it will be saved here. If you're not happy with it, you can always select that and delete it. Or if you've created your own set of models, you can create as many models as you wish. Double click on it, and it will load up your model. Option to wait, execute now, execute later. Here are your inputs, and it computes for you, and here's your result. Okay, so again, you can save as many strategic flexibility options, real options as you wish. Okay, delete, save as, and so forth. And of course, edit if you make a modification. Now, you're done with strategic view. You can click on sensitivity. It does a sensitivity analysis of all your inputs with regard to the option result. So again, very simple to do. Here's a tornado analysis. You can say asset value is more significant. Pay attention to it. You can create a scenario table if you wish and update the scenario and see, your calculations in this case. You can do as many, again, decimals as you wish. And you can see the set of results. Okay, very easy to do. It simplifies your real option, strategic option immensely. Just selecting the buttons and then typing in the values that you wish, and you're done. You can go now to forecast prediction if you wish. If you need to do any type of prediction modeling, analytics, business intelligence, business statistics, forecasting all prices, forecasting stock prices, forecasting costs, implementation, schedule risk, anything at all, charting things and so forth. So in step 1, you would enter in your data. Okay, again, if you have some data in your Excel spreadsheet, what you can do is you can probably just right click on here, copy it, or just do a Control C. Come back in here, select the area that you wish, right click, and do a paste, and you have pasted your data in this case. Or just to simplify, we'll click on example, and it will preload a set of example data set. Just to get started. So step 1 is your data, in other words, right? So type in the data manually. You can manually type in the data, or you can do a copy paste, or just use the example. Now, I can select, let's say, sales, the whole entire variable. Click on that header, go to visualize, click on visualize, and what it does is it charts that variable for you automatically by just clicking on a single button. You can click on 3D, 2D area, whatever you wish. Okay, you can chart 2 of these, so Y and X1, for example, and visualize, and you can actually see X1 and X2, area versus lines and so forth. Okay, very easily. So here's your data. That's step 1. Step 2 is your analysis. Choose the analysis that you wish. Okay, here's your over 100 different types of analysis, 120 to 150 different analysis. You can do analysis of variance, ARIMA, predictions, econometrics, what drives your GDP of the company, of the country, company revenues. You can model, interactions. You can do different charts, bar charts. You can do control charts to see if something is out of control, in control, correlations. You can do distributional fitting. What distribution does, let's say, costs actually follows, historical costs or revenues of your company or all prices and so forth. You can do a distributional fitting. Is it a normal distribution? Is it a Erlang distribution? You can do a different type of general linear models. You can do regressions, parametric neural networks, genetic analysis, parametric, non-parametric, stepwise, time series, trend line, volatility, a lot of different things. Now, just to illustrate how you would go about doing this, let's do something as basic as absolute values. I'll select absolute value, and it tells you that the data is required. Looks something like this, like a variable. So whatever data that I've pasted in here, notice that this is notes, which means the name of your variable. On the top here are headers. So var1, variable 2, all the way to as many variables as you wish. And by the way, you can click on grid configure, and you can add as many, up to 1 million rows of data and up to 1,000 columns. That should be more than sufficient in most cases. All right, that's a couple billion data points. So let's say I choose absolute value, and I want absolute value of variable 4. I double click on it, and it brings variable 4 in here for you. Or you can type in variable 4 on your own. So var 4, for instance. If you're done with it, we go to step 3 and we hit run, and here's your variable 4, and here is your result. And of course, it will just return the absolute value, okay, for you. A very simple example. Now, if I'm happy with this, I'll give it a name. So this is my model, okay, my absolute value model. Give it some notes. So this is example that I've done, okay, and you can click on add. And what it does is it adds it all the way to the bottom in this case. And of course, you can move it up or down, okay, by using this escalator up-down button. And here's your model. You can double click on it to recover it for the future. So what I've done is literally clicked on example, and what it does is preloads all the example data set that's in here, as well as some pre-saved models. So for example, if I wanted the ARIMA model, which is a model for pricing, commodities, price of oil, price of gas, price of, pork barrels, whatever, you can actually see here's your forecast versus the actual data. Here's your statistics that's in here if you're interested, and all your results as well. Okay, so everything is preset here. Auto econometrics, ARIMA. Here's my charts. So if I do like a control chart, you can actually see a control chart value in this case. So I just generated a control chart, and you can see that I have chosen control chart R, and here are my variables that I've chosen. So you separate your variables with a semicolon. So I've chosen various variables. So for example, if I want a correlation, pairwise correlation, double click on that, okay, and you can actually see any of the correlations, or linear, non-linear correlations. So I've correlated variable 5 with variable 6, variable 7. So it's 5, 6, 7, 5, 6, 7 in this case. Linear correlation, p-values of the correlation significance, and the non-linear correlation in this case. So pretty easy to use. Just utilize the pre-saved examples here to get started, so that way you don't have to worry too much about how to utilize this. Just make sure you save the models as appropriate. Okay. Now let's say you're done with this business intelligence, forecasting, prediction type, analytics prediction, and if you want to go to portfolio optimization. Now portfolio optimization just optimizes your portfolio. So in this case, we only have two options, which is really not that fun to optimize. So what I'll do is I'll open up the DCF example just to illustrate what we're doing for the DCF. In the DCF, notice that applied analytics, risk simulation, all these different things are still there. Let me load an example on DCF. Okay, so I don't have to start everything from scratch. Notice that applied analytics, risk simulation, option strategies, all these things are identical. All these level 1 tabs here are identical, except for the first tab. So whenever we have a new module, we only change the first tab in this case. Everything is modular, everything is identical. So if you look at discounted cash flow, we still have the custom calculations as you saw previously. And we have various options. Option 1, 2, 3, 4, 5. You can add as many as you wish. So in option 1, This is a DCF model, so a more generic discounted cash flow. You have a starting year, ending year of your DCF, your discount rate, and your marginal tax rate. As many rows as you wish for each of the categories: revenues, direct costs, gross profit, and it will go through a discounted cash flow model. So earnings before interest, taxes, depreciation, amortization, EBITDA, EBIT, net income, and make sure you put in your capital investment. So anything that's a required input, please put some numbers in. Even if it's zero, just put a zero in, and you have all the various different types of cash flows. So very simple, very similar to the input, boxes that you saw previously for the oil and gas. Now we click on cash flows. This is calculated for you automatically. You can put in additional balance sheet inputs like current assets, receivables, inventories, common equity, and so forth. It will calculate all these different ratios for you. Okay, whenever you see a vertical list in this case, just make sure you go through this scroll bar vertically or horizontally. Just make sure you spend some time looking at everything. Economic results, very, very similar. NPV, IRR, MIRR, all these different things, they're all located here. You see the same charts again. Here's your net cash flow over time, multiple years, and so forth. Information details, you can add things in there. Multiple options. You have your portfolio analysis, which compares various options. Now we have 5 options. You can look at NPV across all 5 of them. And so chart-wise, I can see NPV number 3 is the highest, just visually, very quickly. I can look at IRR, okay, and see, well, actually option 2 and option 3 are relatively high, and so forth, okay. Discount rates, again, WACC and beta that you saw previously. So that's the discounted cash flow module. Now, in this case, because I have 5 different options, it makes it a little bit more interesting, if you will. Chances are, when you do optimization, you want to have more options, 5, 10, 20, 50 different options that you're choosing. So in this case, I click on portfolio optimization. There are 3 subtabs here. You do the setting, you get the results, and you can do your own custom optimization. In this case, we'll do an optimization setting. Step 1, decide if you want to do a discrete go, no-go decision. I have 5 options in this case, if you recall, 1, 2, 3, 4, 5. That's listed down here. You can uncheck them if you want. Unchecking just means I don't want to analyze this. Or ignore that completely. So in this case, option 1, 2, 3, 4, 5, binary go, no-go decision. Continuous just means I want to allocate, if my budget is 100%, I want to allocate it across 5 assets, 5 stocks, or 5 business processes, 5 business projects, and so forth. Okay, or go, no go. Choose the different combinations. Do I do 1 only, 2 only, 1 and 2, 1 and 3, 1, 3 and 5, 1, 4, 5, and so forth. Okay. Step 2 is choose the objective you want to maximize or minimize. So in this case, I want to maximize return to risk, so bang for the buck. Highest return subject to the least amount of risk in this case. So I would choose the maximize portfolio return to risk. Or you can max your portfolio NPV or custom variables if you wish. Now, spend a little bit more time on the videos on optimization if that's what you need to learn a little bit more about the concepts. Here, we go to step 3, choose your constraints. I can choose a constraint to say number of projects less than or equal to 3. I want to choose the best 3 or 1 or 2 out of the 5 options that's available. Okay, no more than 3 projects. And my total investment is, say, $105 million. If I were to invest in all 5 options, it would be $167 million. Don't have that money, so that's my budget. And you can add as many constraints as you wish, and your custom constraints as well. We can add additional constraints. Or custom constraints or custom variables. Okay, and again, watch the optimization video for more details. Click on Run Optimization, and in this case, we have really not run a simulation. That was my mistake. So let's come back in here, run a simulation first. So the key thing about running, optimization. By the way, the reason why I did not run this is because I changed this to a discounted cash flow model. Don't forget. So what I have to do is go through from left to right, and I kind of sort of skipped a step here. Okay, so I ran a simulation. Now I've got results. I've got all these different things. Okay, now I can go to portfolio optimization, set that up, then run optimization, and it will work clearly. So because I skipped a step. Be careful. Do not skip steps. So objective function is this value. That's the highest bang for the buck. I spent $100 million, 3 projects, and is selecting option 1, option 3, and option 4. So projects 1, 3, and 4, that will give you the highest bang for the buck. that will give you the best combination that you can use, subject to your constraints in this case, okay, in your budget portfolio. And these are all the details in optimization if you're interested. We only ran one optimization, therefore it's one dot. If we have iteration, objective, really doesn't matter. But if we run additional efficient frontiers, what you would get is a nice efficient frontier chart. Okay, so we can do a different combinations of optimization or advanced customize, which means make your own. We won't go through it in this high level presentation. Spend some time going into the video for a lot more details. But in this case, you set up your method: static, dynamic, stochastic, decision variables, constraints, statistics, objective, and run. Okay. Or if you want to click on load examples, and we've got a couple examples here for you to look at. If I choose the Sharpe ratio, let me choose that, click OK. This is preset for you, it's static. Here are my decision variables. I've got 12 projects. It's binary, go, no go decision. Here are my constraints. You can change the constraints and see it. So my different projects has to be less than or equal to $5 million investment. And here's the number of projects, 12 projects. The total number of projects selected must be less than or equal to 6. Okay, here are the objective. I want to maximize bang for the buck, whatever. You have to put in, because it's custom, okay, you type in your own equation. So chances are you're not going to touch this because it's advanced custom. But in case you do, we have examples that you can use. Click on run. And here's your detail analysis, your chart, your optimized results. So in this case, I would choose project 1, project 4, project 6, project 8, project 11, and project 12. That gives you the highest bang for the buck, subject to your limitations, your constraints, your budget constraints, on number of projects, and so forth. Okay, or you can go with an efficient frontier, for example. Let me see if I can find a. There are a lot of different examples here. So here's an efficient frontier. I will run this. And here's the efficient frontier for multiple projects, and here's your chart. Okay, here's a multiple efficient frontier analysis and so forth. So spend a little bit of time on the optimization video and you get a lot more details on how to set that up. But chances are you won't be doing this, but it is available for you should you need it. And finally, we have a knowledge center, and this is a very powerful tool, very powerful module. There are 3 subtabs: step-by-step, basic economic lessons, and getting started videos. Step-by-step procedures. There are 28 of these procedures. You can read the introduction text, click on next or previous, and notice that the areas that are highlighted in yellow. So that catches your attention. So welcome the ROV analysis tool, tells you what to do. Okay, so it says PEAT's tools are as follows. It's very simple. Here are your menu items, here are your tabs. So pretty much what you've seen in this video. But you can go at your own pace and you can go through step by step, okay, on each of these different tabs and subtabs. So we go through all of these subtabs, okay, and we summarize it as an executive summary on here and how to use the tool. Same thing with project economic lessons. Project economic lessons goes into NPV, IRR. It tells you here's your NPV, what NPV does. Here's NPV, here's IRR, here's MIRR, profitability index, payback. What's the positive, what's the negative of each of these approaches, and so forth. And then we also look at simulation results. So how do you look at a PDF, a CDF, and so forth? So spend some time going through this. It's fairly easy to do. Probably takes you less than an hour to go through all of these. And finally, we have a getting started video. If you click on the getting started video, there are 8 of these. What you're watching right now is the quick getting started video, clearly, that gives you an executive summary, 30,000 foot view of what, where, who, and how, and why of each of these different tabs. And it just gives you a very quick way of getting started with the using the software. Okay, that's the quick started video. But each of these tabs, 1, 2, 3, 4, 5, 6, 7, 8 of these tabs, except for the Knowledge Center. Knowledge Center is self-explanatory, which is what we're looking at right now. There are videos for each of these that tend to go into a little bit more detail, if you will, about project economics. What's the DCF model? How do you look at it? Applied analytics. What's a tornado? The interpretation. Risk simulation, choosing some of the assumptions, how to review some of the output statistics and so forth, portfolio optimization, forecast prediction and so forth. So you can watch all of these videos. If you've downloaded the videos, then these videos will be saved in your installation folder. So you'll see /, typically your C drive, program files, real options valuation, and will be a getting started videos or videos subfolder. It will be where everything is preloaded. But to simplify the installation, for the first time you're installing the software, we do not install all the videos. We only install the quick getting started video. So if you're going to be watching some of these other videos, make sure you're connected online with, relatively decent internet speed. Click on it, and what it will do is it will download that video for you, and it will play that video for you. Okay, so very easy. And once you've downloaded it for the first time, it will save it into, if you have administrative, authority, of course, for your computer, it will save it into that folder. And the next time you watch it, it will be available, live. You do not need to re-download it again. Okay, the only exception being the first video.